Welcome back to Strongman Personal Finance, everybody. This is going to be the last video of the night, and I'm actually pumping these out because I will be on the road over the next couple of days, which means I can only make cell phone videos, and I can't analyze stocks. So today we're going to look at a stock that Jeremy Financial Education has talked about, because what he does is he just mentions 1,000 different freaking stocks, and if one goes up, he says, "Oh my God, I predicted that, bro. I'm a genius." Let me tell you what, ladies and gentlemen, Jeremy's a freaking moron, but he may be onto something when it comes to valuing meta stock. So what we're going to do is we're going to do a quick fundamental analysis of meta, and we're going to see roughly what it's worth, what's its fair value. Okay. So let me share my screen. This is really hard, ladies and gentlemen. Okay, you just do a quick screen, then you do some more research, and it's as simple as that. Okay. All right. So let's go look at Meta. So first and foremost, let me show you my Excel sheet. If you haven't seen this, this is what I use to screen out stocks. Okay. I have a bunch of inputs here. You can ignore free cash flow because I haven't done that yet. You can ignore free cash flow margin. I haven't done that yet. We're just going to look at it from a GAAP basis of accounting. Okay. So the first thing you want to do is trailing 12 months revenue, because we want to see how much revenue Facebook has made over the last 12 months. And remember, you got to keep in mind, sometimes companies have fluke years and they have massive increases in revenue. So if you're doing an analysis like this, you don't always necessarily want to use the trailing 12-month revenue and use that to project your revenue assumptions going into the future. You can actually manually input the revenue assumptions down here and be a little bit more accurate. But for the purposes of this, I mean, I think Facebook's Meta's revenue is still going to grow. And I'm not sure they had a fluke year last year. So we're just going to use their trailing 12-month revenue. So we go over here. Google Chrome actually freaking opens. God, these freaking MacBooks kill me. God. Oh my God. Come on. Oh my God, this is embarrassing. There it is. Jesus Christ. So Meta's trailing 12-month revenue is $117.929 billion. So we go back, 117,929, 000,000. Okay. Oh, look, guys. Buy price. 1,127. It's buy, bro. Next, we do the shares outstanding. So let's see. How many shares do they have outstanding? So outstanding is shares that are actually traded by the public. When companies buy back shares, those are called treasury shares, and those don't count as outstanding. They're counted as issued, but they're not counted as outstanding. So right now they have 2.859 billion shares outstanding. 2.859. 2.859. 000. And we're gonna assume, now it's a buy at $37. All right, we're gonna assume a discount rate of 15%. If I want to buy an individual stock, I want a 15% rate of return. Otherwise, I'm just gonna buy the index. Okay. Revenue growth, revenue by avenue. So here's where it gets tricky. Now, if we look at the history of Facebook's revenue, let's see. Oh, that's shares out. So let me go back. Revenue growth. We can see year-over-year quarterly revenue growth. So basically, they were growing extremely quickly over the last couple of years. 32, 50, blah, 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 blah. But recently, that revenue has slowed down. And what really destroyed Facebook stock, I don't know if you don't know this, Facebook stock got freaking wrecked, was their guidance going forward had much lower revenue than expected. And I actually found it in the Seeking Alpha article right here. Meta Platforms guided for its revenue to increase by 3 to 11% in the first quarter of 2022, as highlighted. I wonder if that's an annualized rate. Yeah, let's go with that. Freaking dogs are snoring. Jesus Christ. Okay, so we'll say revenue conservatively is going to grow by 6% going into the future. And that's very, very, very conservative. Okay. Now, and that's 6% over the next 5 years, every single year. Now let's go look at the profit margin. Let's see how profitable this company has been, and we could use that to kind of predict, in a way, how profitable they're going to be in the future. Okay. So we have net margin. So it looks like they're a very profitable company. You got 33, 37, 35, 32. So I would say a good rough profit margin would be 30%. So we'll do 30%. And free cash flow, we're going to ignore that. I didn't make a model for that, but it's basically almost the same thing as this. And PE at disposition. Let's go with 15. The average of the market. So right now, if you bought Meta stock at $172, based on these assumptions, you would get a 15% rate of return. And this is not guaranteed, of course, but you would roughly get a 15% rate of return if you bought the stock at 172. Now, I think, didn't the stock dip pretty freaking low? Facebook stock, Meta stock, excuse me. So it actually dipped as low as 184, 186. So it looks like the market is roughly pricing it as I'm doing it right now. Because you see, well, the market obviously isn't having a discount rate of 10%. If you want a 10% return, let's see what the buy point is. It's already a buy right now at 10%, in my opinion. And this is using conservative revenue assumptions. And if they buy back shares, it might even be better. Now, what if the revenue does better than expected? Let's say we want a 15% return and the revenue is 10%. It's a buy at 202 for a 15% rate of return, assuming the revenue grows at 10% per year. I like to be conservative. I would go with 5 or 6, and that would be my buy point. Because I like to basically bake in or get rid of as much risk as humanly possible. So looking at this, if it dropped to 160, 165, I would be interested. Now, if it stays above that, I'm just going to keep buying VT. I'm going to keep buying index funds, which is fine. You don't have to buy individual stocks. But right now, it's not that bad of a deal. Okay, so let's see. What rate of return would I personally think I would get? Is that the price right now? Is it really 184? Meta stock. Oh my Lord. Man. It's actually not that bad. Let's see. 12. Okay, so I think if you wanted a 12% rate of return and you thought revenue was only going to grow 5%, and then you were going to sell the stock at the end of the 5-year period, 185. I mean, not bad, but I like to be conservative. That's why you see the higher the discount rate, the lower the buy point it is, because you obviously have to pay less for the company to get a higher rate of return. If you want a 20% rate of return, 137. So if this stock gets irrationally low and it gets down to 137, it's a pretty good freaking deal. Okay, assuming these assumptions are correct. I mean, I don't know. What if they do 10% revenue and they have a 35% profit margin? 20% return at the price it is right now. There's so many different ways you can look at this. And you obviously want to look at free cash flow as well. But Facebook is one of the stocks that I don't think is a bad deal right now. But if you buy this stock, you got to be patient because the stock could freaking crash. It's just like Baba. I mean, there's some differences between Facebook and Baba, but you got to think of it that way. You could buy the stock, and Strongman said it's a good deal, and then it freaking crashes, and you get mad because you're like, hey, the stock went down, bro. That's what you have to do. Okay, sometimes you have to buy a stock and watch it go down for a long period of time, but just based on this simple screener, it's attractive. Okay, it's definitely something to consider looking at. Now, you want to still look at the macroeconomic environment. You still want to look at competition. You want to see if these assumptions are reasonable. There's all sorts of factors that play into it. But the lower your assumptions and the lower your profit margin that you think, the more safety you build into buying these stocks, and obviously the higher the discount rate. So I don't think Meta's bad. I'm personally not buying it. I like to buy Chinese stocks. That's my gambling fix right there. And I'm going to keep buying index funds. But Meta, for one thing that Jeremy's mentioned, because he just mentions 1,000 freaking stocks. He's such a clown. And of course, every once in a while, he's going to hit the nail on the head. Now I want to do PayPal, but I'm too tired. I'm probably gonna go to bed. But yeah, not bad, not bad, ladies and gentlemen. Let's see if there's any comments. It'd be funny if I wasn't sharing my screen the whole time. All right. Jeremy has spoken. Strong man. I can send you info from the Bloomberg terminal. Let's see. Jeremy, have you seen the May 6th flash crash video? Look it up on YouTube real quick. Sick video. May 6th flash crash video. I don't know. Is there going to be a flash crash? Yeah, I can predict that, bro. There's going to be a crash on May 6th at 10 a.m. Oh, 2010. Did you know Jeremy had a third nipple? How much would 3 revenue growth? We can go back real quick. Let me share my screen. Pull this up. So, I mean, I would say to be safe, profit margin 30% and revenue growth, we'll say 3. For a 15% return, 150. I mean, it seems like 150, 140 would be an extremely attractive price. But that's just me. You can do your own freaking research. Call a financial advisor. Not my staff need a bowl of alphabet soup and poop out a model better than this. I mean, this isn't like the most genius model in the world, but this is a simple way to say, hey, roughly, is this stock trading at a good value or not? And then you got to consider other factors. Like, for example, Bob. Obviously, it's extremely cheap by all metrics. Extremely cheap. But there's obviously a reason why that stock is depressed. There's fears of delisting. There's fears of trade tensions. There's all sorts of crap. China's our geopolitical rival. Of course, Bob is going to be trading lower. But my theory is going into the next couple of years, those tensions might ease. And eventually there's going to be a time where I think stocks in China are going to be attractive again. I could be wrong. But if I'm right and those stocks even get close to what their intrinsic value is, I think I'm going to make a lot of money. But worst case, I'm wrong, and I'm just still fine because I have 95% of my portfolio in VT. All right. I love Tattooed Chef. I wish I could value Tattooed Chef for you guys, but I can't do it. I don't know how to do it. I mean, I can't put it into that model, that little simple model I made. How would this company compare a Tattooed Chef? Well, Tattooed Chef is such a better deal. Okay. Thoughts on HPQ? I mean, after Warren Buffett bought it, there was a run up. I mean, my gut tells me it's probably a little expensive now after all the news came out and the stock ran up. And then, there's always the risk that the projections built into the growth of the printer industry are correct. I don't know. That's kind of iffy. I mean, I think Facebook's probably a little bit better bet, especially if it goes down to $150. It's probably not a bad deal at that point. Did I see the video of the ape father twerking? Do I want to see that video? Dude, you are an a-hole. Stop making fun of other people. No, I'm not going to. Why don't these people stop charging people up to $20,000 for their stupid freaking courses? How about that, huh? My understanding is they will turn WhatsApp into an e-commerce platform. Yeah, I wouldn't be surprised if Meta's revenue grew 10% every year over the next, 5 years. I would not be surprised in the slightest. You look at their past revenue, it's pretty freaking crazy. But they have one bad quarter, and I say this about Tesla too. One bad quarter where they have forward projections of revenue that are a lot lower. That changes the model for everything. Changes everything, and stocks get freaking wrecked. That's why Meta sold off, obviously. And of course, nobody uses Meta. When will you start your accounting business, Chris? Well, I need more experience in tax, number one. But I do have an accounting business. I mean, I am a tutor. Which some people say, oh, you're a tutor. I charge $70 an hour if you want private tutoring. But it's actually, I think it's in the link of the video if you need accounting tutoring. But I don't have like an accounting business where I have an office and, I do accounting for people, at least not yet. Let's see. What's your thoughts on Amazon? Probably massively overvalued. I wouldn't touch that stock. LaFufu buying Russian stocks. He's buying like whatever, just random crap now. I don't even understand his strategy. My strategy is pretty clear. Match your tax advantage accounts by total run index funds. It's easy. Okay, his strategy, I don't know what he does. He picks trash stocks. He picks more trash stocks. He's just freaking all over the place. He's a mess. And of course, that means he has 715,000 subscribers. Because the dumber you are, the more you grow on YouTube. I guess I'm getting dumber the more subscribers I get. Meta going to sell electric cars and frozen margins will increase exponentially. Dude, if Meta announced an electric car, even if they had no plans to make it, Jeremy would be all over it. Advice for getting in the Big Four. I actually never worked for the Big Four. I mean, just go to a school that recruits, go to the network events, get good grades. I mean, I don't think it's that hard if you set yourself in the right, conditions to get it. But I never worked in the Big Four. I worked for NASA as an accountant, and now I work for a very, very, very small public accounting firm, which I like it that way. I don't have to listen to freaking basically teenagers tell me what to do. I'm a senior, and you're just a new accountant in tax, so I know more than you. I don't care. I want to hear your crap, teenager. Hey, weak boy, get that hat at Spirit Halloween. This is my parents. I don't know where I got this from, but I'm actually taking this home with me. This is gonna be my new Jeremy hat. Unless y'all want the pink hat. I need to do a poll, actually. Would y'all rather have this hat or the pink hat? He got lucky with Tesla in the 40s. Of course he did. That's the only reason he freaking is on YouTube. Mike Sass said that Facebook was going to change their name to Meta before Zuckerberg did. All right, guys, that's it. I need to go to bed. And I will be traveling, so this will be my last live, probably for a couple days, but maybe I'll do cell phone videos if something big happens. But that's it. Talk to you later. Cheers.